Underwriting deals is such a major pain point for people. Most don't want to do it, and the people that are good at it are few and far between. That is why after 6 years of being in the industry and buying over 1,200 apartments, using my best-selling multifamily deal analyzer, I created Real Estate Lab, a full suite acquisition software for multifamily investors. We have built a product that helps investors automate their acquisitions and close more deals, all in a cloud-based platform. You can go to realestatelab.com and sign up today using the promo code TAG2 for 10% off your first 12 months. This is David Tupin. Thanks for listening.
Welcome to The Apartment Gurus, where twice a week, host Tate Siemer brings you deep dive interviews with the wisest gurus in the apartment investing industry. These experts are sure to create game-changing value and inspiration designed to catapult your business to the next level. Be sure to reach out to Tate at www.investwithgreenlight.com for access to his investor portal and Calendly link. And now, here is Tate Siemer and the Apartment Gurus.
Welcome, everybody, back to another episode of the Apartment Gurus podcast. And today I have a real estate guru and also does some stuff with cryptocurrency in the house, ready to talk to us about all of his learnings over the course of his 13-year real estate career. But my friend Eng Taing is on the show, and Eng was he currently runs Touzi Capital. Am I saying that right?
Yeah.
Yeah, Touzi Capital, which is a private private equity investment firm with nearly 1,350 investors and $350 million of assets under management. He has 13 years of experience investing in real estate, as I mentioned, with thousands of units of multifamily and 13 senior living communities under management across states like Michigan, Florida, Georgia, Missouri, Virginia, and California. I mentioned he's also into crypto. He runs a Bitcoin mining investment company with deployments across several states, running importantly on renewable energy. Very interestingly, Eng was born in a refugee camp in Thailand and is Cambodian Chinese, but he grew up in LA and he attended school at the University of Pennsylvania and the Wharton School of Business, where he studied economics. Started his career in investment banking, and after the financial crisis, joined the Peace Corps, which is so cool. And he was stationed in the Republic of Georgia. He then had executive roles in marketing, business management, and product at Riot Games, DirecTV, and AT&T, and most recently worked at Apple, where he helped build leadership roles on the iPhone team, Apple Music, and finally led data science on the AI team, helping build Siri. Very, very cool. He is married to his lovely wife, Jenny, and they have two young children, Kai and Aiden. Eng, that is quite a bio, quite a story. I'm really looking forward to hearing more about it from you. So welcome to the show, sir.
Thanks for having me, Tate. I appreciate it.
Yeah, it's my pleasure. My pleasure. So much to unpack just from the bio there, but I mean, I guess take us back to square one. You were born in a refugee camp, but you ended up growing up in LA. How did that all happen? In a brief nutshell, and then tell us a little bit about what it was like in LA and how your education, higher education, and how that's informed your business.
Yeah, I think my upbringing and that everything you said in the bio has informed my investment thesis and my business. And I grew up in LA, but I was born in a refugee camp in Thailand. Mm-hmm. My parents are Cambodian. I'm Cambodian, and we were escaping the Khmer Rouge. If you don't know that part of the history, and there was a very authoritarian regime, communist, and they had there's actually effectively a genocide happening in Cambodia, effectively against the ethnic minority, which is me. So we were lucky to be able to escape. Stories of soldiers coming in the middle of the night and the families disappearing. And I was, I think they drugged my brother, who was 1 year old at a time, so they can walk, escape through the forest, the jungle, so they don't make any noises. But I was lucky. That, and I'm grateful that I was able to come here when I was 3 years old, and very typical or classic American story, immigrant story. Very good at math, but my family grew up on welfare. We grew up on, my parents didn't have any kind of education, no high school, no elementary school, nothing. Yeah. So it's very different than probably what most people think of, Asian immigrants. But they were hustlers. They were hardworking, and I think that really highlighted sort of, at least my understanding of like, what does it mean to be secure and what does it mean to have security? We didn't have security growing up, so I always sought security. And so, I leaned into my good math skills. I went to Wharton, went to school with Ivanka Trump, which is a senior when I was a freshman, and, did investment banking, the thing at the time where everybody was thinking, that's where I'm going to make money. Well, shortly after I joined, there was financial crisis happened, 2008. And you probably remember those times. If you don't, I saw my 401k drop so significantly within the span of like a month or two. And for somebody who was always working many, many jobs and scrapping and, forgoing, meals or whatever it is to save every penny, seeing money that you worked hard for go, at least on paper, go down, was not a great feeling. And that led me to sort of thinking about what I was really looking for, which was financial security. And luckily, I had the capacity to then buy my first property at the age of 23, at an apartment building in the greater LA area in 2009, right after the financial crisis. And that really led me into this whole world of thinking about real estate as an asset that I could put my time and capital into and have a security blanket to do whatever I wanted to do. Yeah. And that was very critical because shortly afterwards, I bought one. I did the Burr method before I knew what the Burr method was. I just bought, a 3-unit complex, did a few rehabs on it, refinanced it, bought another one the following year, which had more money back then. But I realized that I was able to now get close to $1,000 a month in passive income. It's a lot of hard work setting it up, of course, but passive after the fact. And that allowed me to take these more bold steps in my life and career, which I think everyone should have the ability to. But if you don't have financial security, you can't. Yeah. So going to the Peace Corps right after, going to working at investment banking and having the credentials I do have, was very hard to tell my parents that. Like, hey, mom and dad, I'm going to this third world country that was just war-torn country with lots of refugees. Sounds familiar, huh? It was literally a year after Russia invaded and annexed Abkhazia, which is a region in Georgia, and they still have that region. And when I went there, Secretary of State then Hillary Clinton greeted us and gave us an escape plan to escape to Azerbaijan in case anything happens, and wished us good luck. Wow. But I wouldn't have been able to do all that unless I knew I had some kind of financial security to, live, because Peace Corps only paid me $200 a month. Yeah, wow. Which did include housing. So I had to pay for my own housing.
So just sorry to interrupt you, but just so I'm clear, did you have a couple of properties at that point when you went into
I
Peace
had two
Corps?
properties at that point.
Two properties. Your first deal was a 3-unit, you said.
Yeah, 3 unit.
Okay, got it. And you bird it. And most listeners will know that strategy, but that just stands for buy, rehab, re-rent, refinance, and repeat. I think I got that right. I might have an extra one in there, but it's essentially a way of buying and holding, but also forcing equity and building value in the property. So super smart. So I got to ask you real quick, the 2008 crash led to your desire for financial security. And what inspired the real estate angle on that?
The fact that I saw that rents for these places still were maintaining, yes, the prices went down significantly, but the rent stayed very similar.
Mm-hmm.
And that really led me to think that, well, this obviously there was an asset bubble in 2007, 2006.
Yeah.
But cash flow is cash flow. And
Right.
if I can put my money to work and I'm literally getting paid every month without having to work, with the ability to go do something as fanciful as the Peace Corps, or go to my boss later on in my career and ask for the raise, ask for the promotion more boldly, things that you couldn't do if you were more fearful, right? Being less fearful and sort of having this abundance mindset, which I think if you're an immigrant refugee, you probably have a scarcity mindset. Yeah, I definitely grew up with that, and it's hard for me to break sometimes. But that mindset, was because I didn't have much, and you're always grateful for what you have and scrapping by. And but you also know that you can live off very little. Abundance mindset meant that I know that I could do more and more and more, and that I could ask for more. And these steps are, potentially for those who have the financial security, right? We all take it for granted that we live in, one of the greatest countries in the world, the greatest country in the world, and that we have sort of the financial freedom to buy real estate, as long as we pay out taxes, and, real estate helps with that as well. We're able to, live a free life and make money with a lot of hustle and grit.
Yeah. So you had to have known something about real estate because you had your eye on it. You were analyzing it, and it occurred to you that the prices had gone down, but rents had not, income had not gone down. Mm-hmm. So that's a pretty savvy observation. And I know you're a smart guy, Eng. So like that, don't get me wrong here, but did you read a book? A lot of people read Rich Dad Poor Dad, or a real estate oriented book, or did you hear a speaker or something like that kind of inspired you in the real estate world?
I didn't read Rich Dad Poor Dad until a little bit later in life. I took some real estate investment financing classes.
Okay.
Part of my job in investment banking was dealing with mortgage-backed securities. So I was, familiar enough on the financial financialization
Sure.
side of real estate. From a practical perspective, what I saw was my cousin started to buy real estate,
Okay,
apartment buildings, and I think he was really into it, and I thought, it was, and I started sort of seeing how they were improving things, and I really like working with my hands, so just going in and painting something white and changing the floors, or you really added a lot of value, and he was able to walk me through a lot of that stuff.
Sure. Okay, that's cool. So you had a cousin that kind of led the way a little bit. He was investing in apartments. Did you go right? Well, you went right into the small multifamily, the 3-unit and whatnot, and then you did another one. Where did you go from there? When did you start scaling up?
Yeah, so real estate was always sort of a side hobby, that helped fund my life, I guess, or my life funded my side hobby. Not sure which one.
Sure.
But I bought real estate every year, every other year, it was still in that 1 to 4 unit range of what we call residential real estate. I still need to go get a residential loan backed by a W-2, etc. It's not a commercial loan, which is 5 units and above. I've done that. I guess I was doing that all the while until more recently, when I realized that, first of all, I've done very well in my career at that point. 3-4 years ago, I was working at Apple and leading data science and in Siri, and helped launch iPhone 6s and 7, and did a bunch of things with Apple over the course of many years. And that obviously was a very high paying job, and did help provide my own financial freedom. And at that point, I was like ready to scale up. And so I bought my first large apartment building, and large being like 21 units. And then I bought a shopping center. Then I bought, while we're this apartment building podcast, I like investing.
Mm-hmm.
I like investing in things that I can scale. And I didn't really think about scaling it until I had sort of my eye on like, okay, I really like doing this. I think I'm not going to ask for that promotion anymore. I'm going to decline that promotion in the job. I'm going to start decelerating that part of my life.
Okay.
To accelerate my other part of my life.
Yep. Okay. Yeah. Makes a lot of sense. So, okay. So you bought a 21 unit, and then you bought a shopping center, and then you're kind of off to the races, it sounds like, huh?
Yep.
Yep.
And since then, done 30, launched Touzi Capital, which is essentially an extension of, my investment philosophy, and, many, many years of my friends and family asking me to, hey, can I participate in your next deal? Can I invest with you? Not really thinking about that whole aspect of things until I was so confident that I could do that.
Mm-hmm. Because with a high paying W-2 job, you can do those 3 units on your own without other capital and without other credit, I would think. So, you can kind of solo venture those types of deals, but to scale up into larger stuff, you're gonna be raising capital, and it's cool that you had people approaching you that wanted to get involved. That's all. When did you start Touzi Capital?
3 years ago.
Okay.
And I started when I was at Apple. I had this. I'm not sure you saw the movie Jerry Maguire.
Yep.
I had the Jerry Maguire moment. It started when I started to fast as well. So I'm actually fasting right now. I haven't eaten since last night.
Wow.
And it sort of coincided with this moment of like realization. I didn't write a memo or anything. I created a deck. I should remember the scene where he wrote a memo and sent it out, and then he was like ostracized and left. I created a deck, which is what people in corporate America do. They create decks. And I was really good at creating decks. I pitched to, all the execs at Apple, Tim Cook and everybody. So, I pitched product ideas and features and asked for $100 million of, development funds for developing products and stuff. So my idea was really centered around the fact that I went down the rabbit hole, listening to all these podcasts, as well as reading all these books, and realizing that there's this whole side of real estate investing that I knew about, but I was sort of getting deeper and deep into, and realizing that a lot of my really smart colleagues and friends who, launched code and impact the lives of 1 billion plus people, they didn't know much about financial freedom, passive investing, or real estate investing in general. They didn't know about specifically the tax benefits of real estate investing. They've always thought about putting the money in Apple and Google, whatever it is, and that's done very well for them in that time. But they didn't know, because they live in usually a high cost of living area in like the Bay Area and San Francisco. Their concept of buying real estate was buying something and hope and that they would appreciate it, and not cash flow.
Right.
And so realizing that, that a tax strategy around investing was sort of core of what most real estate investors, I mean, should know about, like the fact that my effective tax rate on my real estate income has been low single digits, and I still live in California.
Yeah.
The fact that I still tolerate that,
Yeah,
it's because real estate is a very tax efficient strategy. And for those who make a lot of money, they think a lot about paying taxes or not, or
right.
trying to
Avoiding
not pay
taxes.
taxes.
Yeah. Curious. Before we really dive into your career and what Touzi does now, working at Apple at such a high level position, presenting to Tim Cook, presenting to boards and that sort of thing. Can you identify anything that you learned any skill you picked up or developed along the way that has really helped you in real estate?
Yeah, I think there's two parts of what I've really taken away from my career. One is understand what you don't know. Not necessarily to know it, but to know that you don't know it.
Sure.
And to know that you have a gap in your knowledge.
Yeah.
And to understand how to work with people in partnerships, because you can't do anything in corporate America or in these big companies without partnerships. And similarly in real estate, I don't think you can do anything yourself. I think you would be foolhardy to try to do things yourself. And I think it's a team sport. When you're buying or investing in this scale, so understanding that really led me to try to seek out as many people as possible. I left Apple during the start of the pandemic.
Okay.
My wife was 4 months pregnant, and I just left this really high income job, these golden handcuffs, leaving lots of money on the table, millions of dollars on the table, and saying, I'm going to do this. Having not done a single, big deal or anything. I just closed my first deal last month of Apple, and then realized, then just spending all my time talking to everybody I could talk to.
Yeah.
Which is what helped me succeed at Apple, when, not knowing who built what, who developed what, or what, who's in charge of what. You talk to as many people possible. And the same thing with real estate. You talk to as many people possible to how to understand how to do this whole business of real estate investing, as well as understand the markets, understanding, the tools that people use, and just triangulating what that looks like.
Yeah. Yeah. I love those takeaways. The team aspect. I mean, I would think that so much of what you did at Apple was team oriented, would be my guess. Mm-hmm. And as you said, to your point, Eng, this is such a team sport, this apartment investing game or space, whatever you want to call it. And knowing what you don't know, or knowing that there are things that you don't know, is key. Because I've heard it said, and I'd be curious what your thoughts on this are, but I've heard it said that a real estate investor needs to be prepared to make decisions with about 70% of the required information. Have you heard that before, or if you haven't, would you agree with it?
I haven't heard that, but I agree with that.
Yeah.
I think the key word is investment, right? When you're investing in things, you invest in Tesla or Apple or Bitcoin, whatever it is. You don't know Tim Cook, you don't know Elon Musk, you haven't met him, you don't know the inside P&L usually, you don't know what features they're building, the featured company. So you're doing it in a way that you think but you're making as informed decisions possible, and you're placing bets. It's still a bet, but it's a limited information bet. In real estate, you actually have a lot of information. You can get a lot more information, but it's not 100% information. So 7% it's pretty good. Investing in investment space, you think about 7% information is really good. And the interesting thing about real estate is that you can have a good deal right next to a bad deal. And it's like literally in the same block. Yeah. And depending on your due diligence and, your acquisition price and how you negotiate, you're making your own deals. This is why I love private equity and private deals, private investments, like doing deals, you're cutting out the middleman, you're cutting out this fluff, and just like going straight to the financial heart of it. How much money can I make? How much money do I put in, and how fast would that money make me money?
Yeah. Yeah. Good stuff. All right. So let's talk a little bit about what you're up to these days with Touzi. So you left Apple in at the beginning of the pandemic. You've been all in on real estate. You burnt the ships, and you you really took the leap and made the full commitment to your real estate career, which is amazing. Particularly with what you had on your plate at the time with a new child on the way and that sort of thing. What have you been able to build in the last 2.5, 3 years? Since then, you're up to around 1,300 units, it sounds like.
Yeah. So since we filled out the form, we have 1,458 units. We just closed a 319 unit apartment building in Houston in June. We have 14 senior living communities on the development or operational. We have nearly 1,500 investors. So certainly we're growing exponentially.
You have an investor for every unit that you have. That's
it sounds like it. Yeah.
Yeah, that's amazing. That's amazing. So, I mean, it just begs the question, like, how are you able to build so much so fast? How were you able to build a database that big? How were you able to build an investor base that big? I mean, you're doing big deals. Like how did you go from your 21 unit and your shopping center to 1,500 doors?
There's two parts of it. One is, with any investment company, I think of it as a two-sided marketplace. One side is the investments.
Yeah.
And that's a lot of work in itself, finding good investments to invest in and operating those investments, asset managing them. The second part is the investors, right? Getting the capital to then invest the money. Not all those people want to invest in apartment buildings. That's why we have a diversity of deals. And the deals are effectively an extension of my natural interest in investing. I have bought Bitcoin in 2013. I've mined Bitcoin, and we provide returns in cash on that Bitcoin mining. I have senior living that has really high NOIs, much higher than apartment buildings currently.
Mm-hmm.
But we also have great apartment buildings, and we recently dipped our toes into oil and gas because last year. So I think it's a pretty good timing. All of it stems around my interest in getting passive cash flow income.
Yeah.
And I guess, how have I grown that many investors? I think, interestingly, probably 99% of those investors I did not know 3 years ago. So it's all kind of new people. And we get probably like 10 to 20 referrals a week.
Wow.
I think it's just sort of, and a lot of investors invest multiple times on many deals. So like on that, sometimes they'll have like 10 to 12 investments with us. I think it sort of just talks to, we're focused on investors because I'm investing in every one of the deals. And if I want to make sure the deal works out from a tax perspective, from a cash flow perspective, from an investor first perspective. So I always think from that perspective, because I also know that I don't need, I started this whole thing not really needing all this money. It was more of I wanted to help people get the financial freedom, that security that I had, that I was lucky enough to get. And I think that resonated. And I have an engineering mindset. I have a very data driven mindset. And so I talked about investments with a lot of data.
Yeah.
I really talk about it with a lot of emotion or whatnot. I think it's if you're an engineer, I think that might resonate with you. So that's how we grew probably virally.
On the investor side, do you have the traditional landing page with the click magnet, the downloadable resource, CRM integration, all that good stuff?
We're actually really terrible at that.
Okay.
We have a website. We use a portal, investor portal. We currently use Syndication Pro.
Yeah, we do
we
too.
Used to use Juniper Square. We use many different portals. I don't like any of them. They're okay. I would build my own, but I don't have time. I don't have a good CRM because, and to be honest, I don't know if I can take more investors. So I don't market at all. I haven't marketed the whole time. I do webinars, education webinars around interesting topics that I find interesting.
Okay.
Like specific asset classes or tax strategies or whatnot. And I think it's just lots of words of mouth, and I focus a lot on the investments as well. So I think good deals drive traffic.
Yeah, for sure. But I mean, you can't just put a webinar up there and hope people will show up. I mean, did you have is it social media? Is that a strength of yours? Or, I mean, I know you said you didn't do any marketing, but.
Yeah, I used to post more on social media, LinkedIn specifically, and that's where I'm mostly. I don't think there was, I knew my audience. I knew my audience was, tech investors, Silicon Valley types, and I know, to be honest, I didn't know that I would be this big. My intention was never to grow to this much many investors, because I never thought that was possible. I thought okay, after 2 years, getting 100 to investors is really good, above average.
Yeah.
Getting 1,500 investors in 2 years, it's insane. And we're so I mean, a lot of it is just it's scaling the platform to allow people to invest. We oftentimes have 2 or 3 deals live at any given time. In fact, right now we have 3 deals live right now. So these are things that we, always try to focus on. And I think the product sells itself. I think, I understand that marketing is very helpful, and I think having an audience initially was using my base at Apple. Mm-hmm. I helped run the real estate investment club at Apple, and I regularly hosted webinars. That's where I thought, I could do much better than other people. I was inviting syndicators and other folks to our meetups, and realizing that, man, these guys are just talking over people's heads. They're not speaking the language. They're not understanding the audience. And I realized that I'm really good at storytelling and understanding how to communicate to people, especially using math and and emotion as well.
Yeah. Lots of good experience in the corporate world of giving presentations. That's a very nice competitive advantage to have, for sure. Something that can't really be overlooked is if you're getting all the referrals that you're getting and all the repeat investors that you're getting, you're clearly doing things well, both in the deal execution realm and also in the communications realm with your passive investors. Do you have any tricks or secrets or even just systems that work well for you as far as investor relations and communications? So
I will say that admittedly, I don't think I'm really good at a lot of that stuff. Maybe it's because I don't have to be. That's why I'm not focusing on it. But that's not necessarily why. I would love to be better at communicating. I think it's more of a scale issue. Like, you have too many investments, too many investors. We don't have enough staff I'm hiring right now. So these are kind of internal operations challenges that I'm dealing with because we've grown so fast. I think the biggest thing has always been offer something, right? Like, don't sell, offer, provide opportunities. That's the way I think about everything I do.
Yeah.
I think of a deal and I think like, okay, I could make this is, I don't really think about it as first, how much money I can make from the deal. I think first, this is a really good opportunity for our friends and investors.
Yeah.
Let's try to figure out how to make it work. And when a deal doesn't do well, or to due diligence, it doesn't feel good, I'm not pushing it through because I want to get that acquisition fee or money. I'm thinking about like, this is going to hurt our investors, right? I'm always thinking about creating that brand value, which is creating trust, right? In this space, it's about trust. How can you create trust? Well, when you're new like me, I'm not, 4 generations of real estate investing. I don't, have, that history. Touzi Capital is a very young company. How have we grown? I think it's about creating an authentic voice and providing honest, open transparency. When things don't go well, things do go well, and providing them understanding, and education. A lot of my work has been centered around education, educating people about what value add strategies look like, or what path to progress look like, or how to use a K1 depreciation, what cost seg study is, or what opportunity zones are. These are all things I've done and we're doing. What senior living, how that differ versus multifamily, etc. Or even like Bitcoin mining, like offering something that which is far left field from what our investors was used to, but understanding that I could explain it in a way that was very relatable to real estate.
Yeah. Let me ask you real quickly about senior living. It's a space I don't have any experience with, but very limited knowledge. You mentioned that NOIs are higher with senior living than apartments, which does make sense to me because I know senior living is very expensive. What are the big differences between a senior living investment and an apartment investment?
The senior living investment is both a real estate investment and a business.
Mm-hmm.
And a business mostly related to HR and operations. Think of this every, you have an 80-unit bed and you can rent it out. Independent living is one version of that, where it's similar to apartment buildings, but we do assisted living and memory care, where we can charge more, but we have a lot of staff, right? That staff is just, make sure that staff is happy, and operations is really critical. Yeah. And so having good HR managers and good operations is critical. But so you have all the benefits of potentially a high potential income business, but you also have all the benefits of leverage and depreciation of tax advantages of real estate. So combining both into one, it's complicated. It creates more, anything complicated. Also, it's probably worth learning. I think, at least for me, creates a moat around, like you haven't thought about or haven't invested in senior living. Most people haven't. You don't see many syndications doing that.
That's right.
Because they're profitable and they're also run by very big corporations, WellPoint and other REITs. Like these are, it's not like mom and pops. Usually those mom and pops don't know what they're doing, and it's usually a doctor or a dentist who refer some patients, and they say, I'm going to open senior living because I see how much money they're making. You're usually charging 4 to 5 times the rent to a comparable multifamily in the same area, but your costs only 3 times much. You're paying for food, you're paying for human resources.
Yeah. Okay. When you're underwriting a deal like that, is it just one model, or do you have to model both the business and the real estate? How do you do that?
Yeah, so we model. We model because we actually have our own management operations team, so we kind of know what that looked like. Okay. We try to understand what part of the real estate, how we should value real estate, because we don't really care about the current operations. Okay. So to be fair, the vast majority of our real estate in senior living is built by us and operated by us. So we built to suit. My partner, who, as I talked about, like we have great partners, is a developer in senior living and is an operator in senior living. He does that very well.
Yeah.
And I'm essentially his REIT. Right? He was buying senior living and selling it to REITs and doing a sale lease back, basically managing it for them at 7.5 cap. And REITs were very happy. And when I met him, I was starting to buy my first senior living, and then he helped me out with that deal. And it was a asset class that I got more and more deeper into, and now we've done 14.
Yeah, that's amazing. That's really awesome. In 2 years or 3 years or whatever it was.
Yeah.
It's just remarkable. It's a remarkable story, Eng. Like your whole story is, from the beginning to where you are now and where you're headed. So speaking of where you're headed, I know that you indicated on your form, let's see, you want to grow to a 1 billion in assets under management, and also develop an investment portal that gives an enhanced view of your crypto investments. So, yeah, I mean, growing from you're at 350 now, 350 million now.
Almost 400. Yeah.
Yeah. So you double that, double and a half that, and you're there, man. That's that's exciting.
Yeah, it'll probably take a year and a half or 2 years.
Yeah, that's awesome.
It has never been my intention to look at those numbers and think about those numbers. I only filled out the form because that was part of the form that.
Yeah.
I don't really look at that. I think about it. I think the market will shape what that looks like, right? The market is very rocky right now. I'm an economist by training. I've followed these things very closely as well. But I certainly think that there's always opportunity when things change, and change is happening.
Yeah.
So opportunity is happening.
Do you see some opportunities coming up in the way of like distressed properties, underfunded, undercapitalized type stuff?
I do think that. I don't think it's time yet to do those things, but I'm looking closely at it, and I'm trying to keep my powder dry for that. And I continue to be very bullish on senior living. We're probably going to build another 20 in the next 2-3 years, and I think it's one of those things where I feel very strongly that it's very recession resistant. Because you think of the residents we have, they are typically 80 and above, and they don't have a job.
Right.
They actually stay there for around 3 years, and that's usually the last place you stay.
Yeah.
And we do a financial check so that before they even become residents, so that they can afford all 3 years, and they usually can. That's how we accept them. So
heavily risk mitigated,
exactly,
recession resistant, like you said. Yeah. It sounds awesome. Sounds like a great business model. Where are your most of your senior facilities? Are they also in the Texas markets?
No, none of them in Texas yet. We're trying to break in Texas. We're trying to understand the regulatory environment there. Michigan, Missouri, Florida, and we're starting to break ground in Virginia. Okay.
Very cool. Do you have anything left in California at this point?
Yes, I have a lot of my personal assets in California. I live in California right now.
Yeah.
I've been selling it one by one. Probably should have sold more recently, but it's okay. 1031 exchange into my own investments in senior living and multifamily and out, the Midwest and Southeast.
Yeah. Super exciting. Eng, this has been amazing. What a great conversation. Great to learn from you and from your experience. You're a true guru in the sense of your life experience and your business experience, and then what you've been able to do in such a short period of time in the multifamily space. Just wondering if you might have any final kind of words of wisdom for the listeners that are looking to scale up, would love to grow as fast as you grew in 2 years or 3 years. What would you say to those guys at this point, or gals?
I think anyone who's trying to break into this space or haven't done it right, I think if you haven't invested at a personal level, and if you can do that, I think oftentimes failure is the best education as well. I'm not saying that I think you can analyze all you want. But acting is going to be the best way to learn. If you can't do it yourself, find people who can. You oftentimes will have more, something that they don't have. Oftentimes it's time. For our investors, they don't have time. They have money, they don't have time. Find somebody who has plenty of money, don't have time, or at least wants to participate in that level. It's always these partnerships I see forming that can spun lifelong business relationships and great businesses.
Yeah, well said. Good stuff. Well, Eng, like I said, this has been fantastic. Really appreciate everything that you've shared with us and just being on the show and sharing a little bit of your space with us. If listeners would like to reach out to you and learn more about Touzi Capital, what's the best way for them to reach you?
The best way for them to reach me is just go to our website, touzicapital.com. Connect with me on LinkedIn. Eng Taing. Once you sign up, we have many deals. I'm always happy to talk to investors. I have a YouTube channel where I post a lot of my content as well.
Perfect. So listeners, it's Eng Taing, and it's ENGTAIGN. Am I right on that?
Yeah.
Okay. And then the company is spelled Touzi, which is TOUZI. So Touzi Capital. So go find Eng on LinkedIn, YouTube, and then go look up his website at Touzi Capital, and learn all about him from there. So Eng, once again, really appreciate you being on the show. Thanks so much, dude. Really appreciate it.
Thanks for having me.
Yeah, listeners, thank you. We're so grateful for you, and really appreciate you guys as listeners and people that tune into the show. Mean the world to me personally. And we've got a great little community that we're building here, 150 episodes or 160 episodes in, and so hopefully you're getting a lot out of these episodes. I'm doing 2 a week right now. So keep tuning in. Every few days we'll get you another episode, and people as high level as Eng on the show, or at least close to it. It's very, very valuable stuff. So keep coming back, guys. You're doing good stuff, and we love you. So with that, we'll check everybody on the next episode. Take care, everybody.
This has been the Apartment Gurus with Tate Siemer. If you enjoyed this episode, be sure to subscribe and leave a rating and review on your favorite podcast platform. To contact Tate, go to www.investwithgreenlight.com for access to his investor portal and Calendly link. He loves to hear from you and thanks you for being a valued listener. Just a reminder that you are the guru. See you on the next episode of the Apartment Gurus.